Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, April 10th, 2023. Happy Monday, everyone. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The previous week, a holiday shortened week here, after a good squeeze through the previous FOMC key level here of 40.3375. Since then, we've gotten sideways price action within a very clearly defined trading range. Early this morning, seeing a little bit of weakness here on the morning pullback. That's going to provide a little bit of selling pressure early at the RTH open. Any pullback, if it finds rejection, could offer an early fade opportunity for the week. If we can find a strong rejection after this early selling pressure to begin the week, something like this day over here or this day over here, where it begins strongly lower, but by the end of the day finishes strong, that could provide a follow through to the upside, where we go find 4,200 and the edge of this current range. So right now, looking at further selling pressure here, likely toward the previous week's low. Previous week's low would be here, and that provides a target zone to watch for rejection. But further downside here early on, if there is rejection, we could be looking at a buy the dip opportunity over the course of the week. If it fails to reject at that point and we get a full-on breakdown out of this multi-day range, then we could be looking at a quick reversal back toward 4,000, perhaps even across the range. So this narrow multi-day range right here, once we do get expansion, could provide a solid breakout opportunity up ahead. All right, let's take a look here at the NQ. Right here, the NQ, you can see pushing down, starting with a failed new high, outside day down at the moment. Low range outside day down, working its way lower within this compression right here. Again, even if price approaches the previous week's low, that's 12,950, that could provide an opportunity to watch for a bounce. Any bounce could lead to a reversal back up toward the highs of the prior week, and perhaps even through those highs. Again, it'd be very similar to back here, where price breaks down through the bottom of the range here and by the end of the day is able to close back above. Can that happen here in this scenario here today? If so, again, that pullback and bounce or some rejection that happens could allow for an opportunity to buy the dip and look for a continuation higher toward 13.5 or even beyond, as this market continues to show a bit more strength than its counterparts. A failure to hold the 12,950 though, for example, a push through that level early this week, could lead to a follow through back toward 12.5, and again maybe even across the range. So keeping an eye on that 12,950. Taking a look here at crude oil. Crude oil right now stuck within a very narrow range here over the last 5 sessions. Big gap up here to begin last week, holding it ever since. Outside day down developing at the moment, almost there to the previous session's lows. That's going to be 79.65. Once price surpasses that level, we go outside day down, but we're still inside this range here after the gap up. So 5-day super narrow range on a 5-day basis. Price has not really been able to find acceptance above this blue dotted line, which is the previous year's close price of 80.5. 80.51 is that level. Price really hasn't been able to find a way to push through that level early on this year. But again, given the strength of this trend right here, if on the next pullback we can find an opportunity to get a higher low here, perhaps we can go finish the move into the 82-83 zone and find the top edge of this range. Otherwise, a failure to really get going through the previous year's close here suggests a reversal back down within the range, and that takes us back towards 72s and the bottom of this previous market structure. So right now, are we going to break, or do we stay inside the range? 79 is the edge over here. The top end is about 82, and we could freely move within that range until expansion is seen. All right, let's take a look here at gold futures. Gold futures down about 1% right now. Again, price pushing through that 2,000 level, getting up into the 2049s. Not quite to the edge of the range. Remember, the 4 or 5 year highs takes us into 2078, as high as 2100 up there. That's been the upper edge of resistance. Last year's high, 2078.80. Got very close here and already starting to push back down a bit. Not back below 2000 just yet, but if if things start to break much farther to the downside here, we could be looking at a full-on snapback that takes us all the way back to the 1830 level. That's the previous year's close of the last 2 years. So right now, seeing a little bit of a pullback. This is an extreme reversal signal here, kind of similar to what we've seen back here, where you get a blow off to the upside followed by a sharp reversal back to the downside. Now again, perhaps this pullback could be a buying opportunity inside the bullish PEMA trigger zone, which has been the case here for a while. If it can find a way to find a low early this week, perhaps we can squeeze up into the 2080 to 2100 zone, and really a failure starts to occur through the 1960 level. So we could pull back as deep as 1960 and still try to hold and build. As soon as it fails at 1960 is about the time we open up the 1830 below. All right, let's take a look here at the YM. YM developing within a narrow range here. This is a 6-day developing narrow range, super compressed overall. If you look at the 6-day calculation right here on the developing basis, 36% of average. Again, you would expect that during the holiday shortened week. Now we have quite a bit of compression here that forecasts a move north of 1,400 points, north of 1,000 easily. And so we could be looking at, you know, a breakout move of 1,400 points, something in that range. A failure to hold 33.4, and we're dropping downward, perhaps toward the 32.6 level, the previous month's midpoint. Again, as I mentioned last week, if this downward selling pressure is met with a rejection, that rejection staying above 33K could provide an opportunity to buy the dip for a move into the 34,500 level. That could be a phenomenal upside target over the course of the next 1 to 2 weeks. So again, how do we respond out of this range? If price can drop into these lows here and find an ability to reject those areas, that higher low could be a jumping off point for a continuation toward 34,500 up ahead. All right, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.